Hello guys, you're welcome back to my YouTube channel. So guys, today I'm going to be sharing something very important, something I use in my trading style, right? Something I use in my trading plan that helps me to take key decisions in the market. So I'm going to be showing you how I trade using key psychological levels, right? I'm going to show you how to apply these levels on your chart and then how to make trade decisions using these key psychological levels. So guys, as you know, I use trend line, I use key psychological levels for my entry, I use Fibonacci and lots other confluence before going in on a trade, right? So today I'm just going to be sharing that opportunity with you, how you can trade using key psychological levels, right? How you can make trade decisions using key psychological levels. So let's get into the chart. So guys, as you can see right here, you can see that we have key psychological levels here at 1.24500. Here is the key psychological level. We have another one here at 1.24000 as the key psychological level, and then we have another one down here at 1.23500. Now that's also a key psychological level. So I will just show you how to, you can just add horizontal lines to your chart to further bring out these key psychological levels. But now, what are key psychological levels? Key psychological levels are prices at which the market makes a turn. Do you get? Key psychological levels are prices at which buyers and sellers come to an agreement for the market to make a turn in direction or a change in direction. Now, for instance, if you go to the market to buy goods, right? And for instance, you go to the market to buy, let's say you go to the market to get a book, right? And then the shop owner tells you that this book is going to cost, say, 1,000 naira, for instance. Okay, for using 1,000 naira. Now, you're not going to tell the uh, shop owner that you want to give them 920 naira, right? You are going to probably price to the nearest whole number, right? Or say, okay, I would pay 950, or say 900 or 850. You'd hardly go and hear people who say, okay, I want to give you 872.5 naira, right? So these psychological levels are like whole numbers because the market is being operated by humans, right? Buyers and sellers. So we feel that those key psychological levels, those key whole numbers should hold price into reversing. So I'm just going to be sharing how these key psychological levels work and then how you can also add them to your chart. So as I've indicated, you can see that we have a difference of 500 from 1.24500 to 1.24300, right? Now, these key psychological levels are these whole numbers here that we have on our chart, right? You can see this rounded figure into 500. So what you want to do is you want to put 500, 500, 500 around where your chart is currently trading, right? So when you have these 500 levels on your chart, then you want to wait for reactions around these levels, right? So guys, let me just give you an example. This was news. I think we traded this news the other day. I plotted out my Fibonacci and then we had a reversal on this level, right? We had a reversal on the 61.8 level and then we were able to enter here for a buy and then we took profit somewhere around here, right? Now, one of the things that made me enter this trade after plotting my psychological level, another confluence that gave me that gave me the positive mindset to take this trade is also this key psychological level 1.23500. As you can see the reaction here, the first time price approaches key psychological level here, can you see price moved away from it, traded to the downside, stayed around this key psychological level, moved away from it, came back to it and then pushed up, and then we were able to take profit here, even though we wanted to take profit somewhere around this high here, but we took profit around here, right? So you can see how key psychological levels work. Now I'm still going to show you other examples. Now, as you can see, When price came into this level, let me just clean up this chart. So as you can also see here, when price came into this level, this is also a key psychological level, right? We have 1.24300 on that level, right? What did price do when price got into that direction? Price reversed on us, right? Pulled back, went all the way, broke out this key psychological level, came back, pulled back, and then can you see, still broke out here, and then pulled back to test this key psychological level, and then collapse. Now you hear me say break and retest. Now there are lots of confluences before you go in for a sell, right? Let me try to explain this better for beginner traders. How you could have gotten another opportunity to enter for a sell position here. So guys, now you can see that price is traded to the upside, right? Pulled back on us on this key psychological level, went up, Now price did not even get to this previous high, indicating that the buyers are beginning to lose momentum. Price pulled back on us and then finally struggled to get to that high, right? On getting to this previous high that we have here, what did price do? Price collapsed, picked up again to try to break out of that high, but it couldn't. Now, as a trader, what are you supposed to be doing? By seeing this price action, you're supposed to know that, okay, the buyers are getting weak and the sellers are beginning to take over, right? But then you're not expected to go in on this trade yet until there is a break in structure, right? Until there's a break in structure. Now, while you're sitting and waiting and watching this trade, what's happened? Price came into this key psychological level here. Price came into this key psychological level here that has held the market before. Can you see? Now, price came down, right? Broke out of this key psychological level, just pulled back up to test this level and then sold off to the downside. Now, I would be interested in going for this sell, and I probably won't think we took this sell. Because I have all my trade positions and I'll check. I think we took this sell. Let me just still show you what I can make out of it, right? Upon price just coming to test this level and turning, you could have entered this trade for a sell, right? Now, what you want to do with key psychological levels, you want to put your take profit at the next key psychological level, which is just here, right? Just put your take profit at the next key psychological level, and then this trade offers you maybe like 100 pips, 10 pips in stop loss, right? So it's just something very basic, and you can see here that we have a 1 to 4.7 risk to reward. Now, upon price approaching this level, you know that price is not going to slow down here because the seller just took control of the market, right? So price is going to probably break that level that we did, and you can see that this can also be extended into a 1 to 9 risk to reward. Now, what this simply means is that you're risking, for instance, let's say you are choosing to risk $10 or $100 on this trade. Now, this enables you to make times 9 of that, right? So if you're risking $10 on this setup, you're going to make out $90 on this setup, $90 and above, right? So if you're risking $100 on this setup, you're going to be making out $900 from this setup. So if you're risking $1,000, you're going to be getting $9,000 on this setup. Can you see? So this is a very beautiful trade to take. So you can see how key psychological levels work, guys. If you did enjoy this one, kindly hit the like and subscription button, guys, so you can get notified when we drop new content. So I'm currently on vacation, but I'm going to trying to put in more effort to put in videos that are going to help your trading and take you to the next level, guys. So peace out and looking forward to seeing you next time. Bye, guys.